In this presentation, we're going to record transactions into Excel related to a situation where one company is purchasing the net assets of another company, resulting in the need to value those net assets at the fair value and resulting in this case in the recording of goodwill as well. Get ready to account with Advanced Financial Accounting. Here we are in our Excel worksheet. We're going to have the information on the left-hand side. We're going to enter that information into a journal entry on the right-hand side, and then we're going to post that to a simple trial balance where we have the beginning balance, then our entries, and then the ending balance, just so we can see this in context with things that are in balance so we can post this. I think that's a useful practice to do. So we have S, fair market value, paid by P for the net assets. So in other words, we're going to have a situation where P is always the parent company in our examples here. So it's going to be the P is going to be purchasing, in this case, the net assets of S. So now S is a separate company. So we're not talking about P, the parent company, then creating S and just breaking off some of their assets and liabilities into another company, but rather purchasing the assets, the net assets, assets minus liabilities, net assets that are being purchased of another company, that being S, the subsidiary in this case. So they're going to say that they paid $68,000. So in this type of transaction, we could basically think of this as a sales type of transaction. It's not just P reformatting, restructuring in some way. It's now basically a sale transaction that is happening. In a sale transaction, then that's when we typically need that revaluation, right? So now we're not just going to say, okay, well, what's the book value of the subsidiary company and take those numbers? No, we have to revalue at that time. And we probably would in the case of this transaction anyways, because it is, in essence, basically a sale, right? And if the sale was going to take place, what would happen? We'd revalue in some way fair market value of the assets and liabilities. And then we would decide what, negotiate market forces taking place here on what the price will be that will be paid. So in this case, typically these types of problems will have a book value and a fair market value. And in this case, you're going to say, all right, I'm going to take the fair market value in this case. Now, of course, in practice, negotiating what that fair market value is or determining, and not just in assets, but asset by asset, and we'll take a look at some more longer problems later to break that out, is more intensive. So this is going to be a simplified example. We'll take a look at some more detailed examples here, but the concept here being, if we have the assets at book value, we need the fair market value, liabilities, same thing here. So amount paid to research firm for finder fees related to the acquisition. So we're going to say that $8,000 was also paid for basically this process to take place for the finder's fees. So we're going to have to record that as well. We want to make journal entries for P to record investment in S and for payment of finder's fee. So then over here, we're going to say that this is P. This is a very simplified company, obviously, but we have something in balance, right? We've got cash, we've got the retained earnings that we're going to say here, and then, which is the equity section, of course, and then the income that has been recorded thus far, $50,000. Now we're going to say that this is taking place. What's going to happen? Well, oftentimes, again, I'm going to construct this in such a way where I'm not going to put the debits on top and the credits on the bottom. I'm going to construct it in a way that makes sense to me to construct. And then if you want to go back in and put the debits on top and the credits on the bottom, you can. But I would think about it first, what way does it make sense to me? So one thing I know is happening is cash is going down, right? So I might start with that. I'd say, all right, well, it's a credit, but I know cash is going down. Let me start with that, right? But you can't put a credit on top. Well, you could try to put it on the bottom somewhere here, but it's going to be a long journal entry. So I would just say, I'm going to start with a credit on top, and that's okay. I'm okay with that. So I'm going to say, there's the $68,000. So there's the $68,000, and then the assets are going to go on the books. Now we've grouped all the assets, basically into one lump sum here. So these are the assets of S that are going to go on the books of P, which only has cash at this point in time, right? So we're just going to say, all right, all these assets, and again, we'll get a more detailed problem later, are going to go on the books. And then, of course, the question is, well, do I choose the book value or the fair market value? Well, there's an acquisition. There's a market transaction taking place here. Therefore, that's my rationale. That's my reasoning. And I think it's consistent with the reasoning of why the law is the way it is. The procedures are the way they are. We need to take then the fair market value. So I'm going to say I need to flip that number to a negative. So I'm going to say negative of that number. All right. Then we also have the liabilities. So I'm going to say, all right, the liabilities need to go on the books as well. So I'm going to put the liabilities. They're going to have to be, actually, what am I saying? These assets aren't A negative, they're going on the books as a positive number. Sorry about that. Fair market value, positive number, debited, increasing the assets. Then the liabilities are going to go on the books. They will be a credit. So liabilities are going to go up in the credit direction. We incur the liabilities as part of this process as well. So I'm going to say negative of, again, the fair market value, which happens to be the same in this case. So there we have the 27,000. Now the difference, that's it. That's the whole thing. I'm going to deal with this later. The question here, of course, is do you put that into the journal entry up top, or do you break that out separately? And typically in this case, we're going to break this out separately. That's going to be an expense just related to this process. So we will expense it in a similar fashion as every other type of expense, just expensing it as it is incurred. Therefore, we can see the debits do not equal the credits. If I was to highlight this, we're at 28,000 being the difference. I can plug that in here with the negative sum formula, which is what I would do, negative SUM, and then pick up these guys, all right? And then I'm going to say that that's going to be what? That's going to be goodwill, right? That's going to be goodwill. Now, again, note that typically when this is going to happen, this kind of transaction, if you put something to the fair market value, you might be saying, hey, look, if I revalued S's book, assets to a fair market value, why in the world would then we still pay? Because we're saying, in essence, we're saying, hey, look, this is the fair market value of the assets and the liabilities, and you said the fair market value of basically the company, the net assets, is something greater than that. How could that be? Because there's got to be some intangible, right? And that's going to be the goodwill. So when you look at this, when you first start looking at this, you might start saying, well, hey, look, if I revalued the book value to fair market value, then the assets minus the liabilities, this minus this, resulting in this case of the 40,000 is basically the net assets or the equity of the company. I should be paying 40,000 by that. If I don't pay 40,000, doesn't that mean that I simply didn't, revalue the assets and liabilities properly? Because if I did, you would think that that's how much you would pay in a market situation. And the thing is, well, not necessarily, because it could be that the assets on the books and the liabilities on the books are not complete in that they don't have some essential factors such as goodwill, such as brand name recognition, such as, revenue creation potential above and beyond simply the assets and the liabilities. So that's why you're only going to see this goodwill. We don't know what that is, that goodwill. We don't know what it is until someone actually purchases the company. You can estimate it, but it's tough to estimate, right? It's tough to estimate until someone actually purchases the company. And if it's really an arm's length transaction and you're really able to value these at their basically fair value, then you can recognize and say, okay, then that must be the goodwill. Then the difference between what is paid over the assets minus liabilities, which are on the books that were purchased, must be some kind of goodwill, such as brand recognition or something like that. So that's the basic concept of goodwill. Now we'll break out longer journal entries later to break out the actual assets, and it is obviously difficult to revalue the assets of a large company, right? All the assets of a large company and the liabilities. So we'll talk more about a longer transaction later, but that's the essence of it. Now note, it's also not generally the case. If this goodwill came out to be a credit, you would think then it would be an advance payment. We'd have to recognize a gain here. So just recognize that doesn't really happen all that much, because then if you were to say, okay, you revalued the book value to the fair market value, and then the market transaction resulted in less being paid for it than even the fair market value, the book value of the assets minus the liabilities, why would that be? Unless the brand name is negative, unless it has a bad name to it that's actually going to drag down the purchase or something like that. That seems unusual. So you might say, well, it could come out to be debit or credit. Debit would be goodwill, credit would be some kind of revenue. But normally it's going to be a debit, goodwill, almost never even. Usually there's going to be goodwill, but it's possible to come out even. Usually it's not going to say that you're going to have a credit. And if it does, then you want to go back and say, all right, did I really revalue these fair market value correctly? Because how can that be? And then if that is the case, which is more of a rare case, then you'd have a gain typically in that case. Okay, so let's record this. Okay, so we're going to go to K3. I'm going to say equals, and I'm going to say the cash there. Cash is going to go down from 150,000 down by the 68,000 to 82,000. Assets then I'm going to say equals or plus, and it's going to go up by the 67,000 to 67,000. Then the liabilities are going to say, I'm going to say equals or plus that 27,000. It's going to increase in the credit direction by that 27,000. And then the goodwill. So goodwill is going to go on the books at the 28,000. So there we have it. And then you're going to say, well, what about this thing down here? So the amount we paid for the research. We're going to treat that just like any other expense. So I'm just going to say, all right, that's just an expense of us doing business, doing what we want to do to make money. So we're going to say it's going to be a merger expense, and then cash is going to go down for it, let's say. And that's just going to simply be for that 8,000. So the 8,000, and we will then credit the 8,000. So like so and like so. Now I'm going to go up here. I'm going to use the keyboard to do this instead of double clicking on it because there's something in it. I'm going to say F2, hit the plus button, then F2 so I can start using my keyboard again down here. So, and I'm going to say that's the cash, that's the credit. So this is advanced accounting, so we'll use a little bit more advanced Excel capabilities here. Not too advanced, but you know, a little bit faster stuff. So we're going to go over here and say that's going to be the 8,000 on the debit. So there we have that. Now we started with 50,000 on the net income before. That's credits minus the debits. This is revenue, not loss. And then we recognize the expense. Now we're at the 42. So there's at the 42. So there's that transaction, a bit more simplified, but makes it easy to see kind of the revaluation and the breakout and the calculation and recording of the goodwill.